please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Counting down to market opening, Sandeep Shenoy now joins us from Pioneer Investcorp. Sandeep, good morning. Thoughts first on IT space. We have seen a big rally in TCS, Infosys and HCL Tech as well.
Well, I think, Anuj, the sector may be turning around and I think could be in for a secular trend upwards right now. I think the initial indications came from the large two and now the third player also is giving a decent set of indication. And I think the second and the third rung players are also getting their act together. So after almost, you can say 8 or maybe 12 quarters, depending which way you look at it, this sector seems to be getting its zing back and could be in for a sustained bout of outperformance vis-a-vis the market. Only thing is that the INR at 63, 64 may be the one factor which is casting a long pall on it. But the moment we are back on our usual USD INR trend, I think this sector could be a marked outperformer.
Okay. Do you want to make any comment on what we got from Mr. M.K. Surana of HPCL? We will play that bite again as soon as we can cut it. But he said that in all probability the deal, it's seriously underway, could be done by March 31st.
Well, Latha, I think a few days back you had said that, you know, the government has got a quote-unquote shortfall of 1 lakh crores to be plugged because of the book shifting. And I think if this comes approximately around 5.5 to 6 billion, whichever way you count it, whether it is capital gains or tax or the related tax, I think it will go some way in plugging out the gap in GOI's books. So that's a positive way of looking at it. But then you have seen the GST figures coming out yesterday. I think there is a gap there also. So all in all, I don't think it's going to make much of a difference to GOI's books, and it's not having too much of a relevance on our markets at the current juncture.
Okay. Sandeep, hi, morning. Would you put more money into something like a Yes Bank after those exceptionally strong numbers, especially on loan growth that we saw yesterday?
Well, I think private sector banks are straining at their seams right now on the valuation front. This is not to say that they are not decent investment options, but I think right now on a risk return parameter on a you know, maybe 12 months to 18-month basis, I think some of the second rung PSU banks seems to be offering much better value for money proposition, which a higher degree of safety. The top rung private sector banks may not crack, but they are not going to give market outperforming gains at the current levels. I could be wrong on that, but I think that's a position which we would like to take at this junction. Okay.
We still have 30 seconds and we will keep the HCL Tech opening tick on the screen. But meanwhile, let's invite Mr. S.P. Tulsian to give us his long-term bet for the day. Good morning, Mr. Tulsian. What are you watching?
See, I'm recommending Shenoy paper because we are quite positive on the paper sector going forward because of the developments happened in the sector with waste paper import banned by China and the production, you know, closure in many of the production units having closed in China. So because of that, the Asian region or maybe Southeast Asia has seen the increasing their prices because of the huge demand, and that is the benefit of that is seen here in India also. So Shenoy paper is a Tamil Nadu based company, and last year they have suffered because of the severe drought prevailing in the Tamil Nadu region, and because of that we have seen their FY17 second half performance to be dull, and actually that has started improving now from Q3, and in spite of that the H1 number of FY18 were not that bad, you know, as it was projected to be or as it was feared to be, with EPS company having posted 38 rupees EPS for H1 FY18. If I quickly go, they have presently 2 paper mills with a combined capacity of 1,95,000 ton per annum, and this capacity at both the mills are getting enhanced to 2,75,000 ton per annum, which should be operational maybe in next 6 to 8 months. And going forward, if you really see the kind of raw material which they are using is 55% bagasse and 45% is hardwood, and both are available in plenty. Bagasse is available from the associate company or group company, that is Pony Sugar. In fact, Pony Sugar was established by the promoters of this company to cater to this paper mill only, and that is seen to be quite positive. So taking all this into consideration, the book value is at 500 rupees, promoter stake is low, though low at 43%, but the institutional investors and all that makes a very healthy shareholding pattern. Debt is very low in the company with a debt of about 100 crore. Market cap is at about 1400 crore with EV of 1500 crore. So we are expecting that probably for FY18 the company should be able to post an EPS of 84, and for FY19 they should be able to post an EPS of 104. So taking that into account, share is ruling at a P multiple of 11 or so. And in this volatile market, when we have been seeing profit booking in mid cap and small cap, I think this is an ideal buy at 11.10 with a price target of 13.30 in next 6 months or so.
Okay, Ms. Sultan, thanks for that. Jain Irrigation has actually put out a press release on the exchanges on the GST rates of drip irrigation that has been reduced from 18 to 12%. They say that this the company has decided to pass on the benefit of this 6% directly to the customers and farmers, and this is a positive step taken by the government and will have a positive impact in the upcoming busy season for their drip irrigation division.
Yes, so I think GST benefits have to be passed on as a bit of a norm here. But anyway, the pre-open rates are now flashing, and currency has actually had a good start, really good start, 0.25% strength in the dollar rupee. So that could be playing out in the stock market as well. Yes Bank clearly is the stock of the moment, at least for starters on the index. That stock is up.
FII buy number.
Yes.
Was that a one-off? If that was the kind of money, I can understand why the rupee dollar is behaving the way it is. And there is still that unexplained conundrum of rising US yields and falling dollar.
Yeah, there was no block, of course. So obviously it looked like a solid number, of course. But anyway, pre-opening rates are looking quite decent for now. As I said, Yes Bank clearly is your star early in the morning. But there are others as well where we've seen some decent gains. JP Associates in the broader market, India Cements, but all over the place. Yeah.
Adani Ports, actually, that stock is also looking pretty good in pre-opening. I saw a positive tick there, up almost about 1%. The management said that they would have some free cash flow by the end of the year. Biocon has entered into a collaboration with Sandoz for their biosimilars division, so that's up in the green. And in terms of result reactions from the smaller ones, you had something like a Keval Kiran that had a good set of numbers this quarter, so that stock too holding up in the green.
Yeah, and I think even Deepak Nitrites, I don't know if we discussed those numbers, I think that number looked really good. Deepak Nitrite, that stock is up about 2.5%. So that's also something that you would want to keep.
Revenue up 31%. So and margins also jumped.
Big jump in net profit. Yeah, I mean a lot of smart investors have been buying this stock. So it's run up a lot already. It's up 25% this month. So should not lose sight of that in a mid-cap market. But numbers are good.
And Bharti Airtel is down 2%. That's the biggest Nifty loser this morning because of the disappointing domestic business.
I wanted to ask Sandeep, the bunch of numbers in the mid-cap space in particular, anything that stood out for you?
Well, I think, Latha, till now, there hasn't been something kind of an outlier on a sectoral basis. So you can't try to take a call right now. But I guess in the next week, we'll be having a clearer indication which sectors are going to be outperformers. And I guess on a preemptive basis, I would love to plunk my money on the second-rung cement players.
Okay, Adani Ports said that they have a lot of free cash flow, even if the numbers were in line. Not of interest to you?
Well, I think a huge infra play after humongous capex, if he starts generating free cash flow, I think you are going to get obscene valuations in those kind of stories. And mind you, this is a $10 billion kind of a market cap story. And on a scale basis, it is comparable to most of the international players. So I guess if this statement turns out to be true, you could be in for good things.
Okay, well, Chandan Taparia of Motilal Oswal Securities is also with us. Chandan, hi, good morning. Can you quickly run us through your top buys and sell calls today?
Yeah, good morning. We have buy on iBull Housing Finance. The stock has given highest daily close in last 55 trading session and surpassed immediate hurdle of 1243. We have seen surge in trading and delivery volume, which indicates that this breakout could aid the further momentum. So recommending to buy with a stop loss of 1222 and expecting it to head towards 1288 level. Second trade is buy on M&M. After the correction of last couple of weeks, the stock is all set to start the next move. It has seen a small decline and taking support at 50-day exponential moving average. Even after the market volatility, the stock was holding the gains in last two trading sessions. So expecting it to hit the new highs, one can buy with a stop loss of 745 for an upside target towards 790. We have negative on the selective metal counter. Nifty metal index was down by more than 3%, making lower top, lower bottom formation. Hindalco is forming a weakest structure. It has broken its 50-day exponential moving average. So expecting it to hit 250, 248 kind of level. One can trade with 255 put, which is trading near to 4.5 to 5 rupees. Put a stop loss of 2.5 and expecting this put to go towards 10 rupees.
Okay, thank you very much for that, Chandan. I'm still waiting for the first bond rate This HPCL statement will perhaps be a little heartwarming for the bond markets as well. And of course, yesterday's statement on the GST rates in December, it was 3,000 crores less than November. But I think that was largely expected by the market. No, none of the economists seemed surprised yesterday. But I would still want to know how the bond yields are reacting today, especially because now looks like HPCL's sale is a done deal from what Mr. Surana was hinting at. Let's just finish off this GST rate tweaking, and this one was on diamonds and precious stones as well. That was cut to 0.25% from 3% earlier. Sanjeev Agarwal, the CEO of Geetanjali Export Corporation, is with us. Good morning, Mr. Agarwal. Is this big deal? Mr. Agarwal, the cut in GST on precious stones?
Yes.
Will that make a big difference to your margins?
It will reduce the working capital requirements, really, not much difference on the margin, but working capital requirements get reduced, and it brings rationalization on the GST rate on the import front and the processing front. As you may know, 85% of the diamond that is imported, cut and polished and re-exported. So on the imports, there's a 0.25%, and then there was a 3% on the processing sales, and cutting and polishing of diamond goes through a number of hands in the SME sector. So this rationalization will improve things in terms of cash flows.
Okay, so cash flows will improve, working capital requirements get reduced. Mr. Agarwal, how much of your total revenue comes from the diamond-studded jewellery segment?
Diamond and exports all put together is more than 60% of our group turnover, and the focus continues to be on increasing our exports.
Okay. The other topic I just wanted to quickly ask you about before we end is, you know, there is an expectation that the gold policy could suggest import duty, bringing down the import duty to about 0% from 10% earlier. Your thoughts on this?
If you look at that recommendation based on the submission to and discussions at Niti Aayog, it has to be looked at holistically rather than just one element of the policy. The whole policy on gold import reduction, gold duty reduction is based on the fact that India can, like in the diamond sector, India can also become the largest market shareholder of exports of gold jewelry. Okay. Where presently our market share is about 14%, and it can be significantly higher than that. Okay. And potentially every retailer, manufacturer, jeweler across the India can use the benefits of e-com to export jewelry out of the country. And hence, as part of that bigger strategy, the recommendation is going down to 0.
Okay, well, in that case, let me wind up this conversation by asking some, contradiction in the trade numbers that came for December. You know, pearls and precious stones imports rose 100%. Import of gold rose 35%. But export of jewelry rose by 2%. It looked very disjointed. Am I missing something?
I saw your analysis of this 2 days back. The question is that if you look at the import of gold, you cannot look at it in isolation for 1 month or one year, really. It is a trend. So the overall figure of 855 ton is the averaged imports, which is ranging between 850 to 950 tons over the last 7-8 years. So within that context, if there was a year last year where the imports had come down significantly in 2016 because of various reasons, that gets recouped in the subsequent years. But an important thing is that the investment demand for gold in terms of bars and coins have been coming down, which traditionally has been about 300 tons, which has almost gone to less than half over the last 2-3 years. So the investment is moving to paper. Jewelry remains steady and growing reasonably. Okay.
Well, I think we have to take this discussion offline. Thank you very much, Mr. Agarwal, for joining us. Well, markets have been stable. It's a stable opening as far as the top line is concerned. But within that, it's Yes Bank and HUL that are leading the rally. ITC as well. Results due today, and it's not disturbed by the increase in GST on paper roll.
Yeah, it's interesting. ITC is actually in the green right now, up about 1%. But Ashwini, your thoughts on pre-open, and what's your 9-10 call?
See, the idea is that the mid-cap correction should restart, and possibly for the first half, mid-cap should remain weak. And you have a bit of a gap up, nothing significant, but at higher levels, if we do get there, there would be a good selling opportunity. Probably, once past 10,840, you should try to sell into the market. As far as stock calls are concerned, I think Reliance Power, you can sell with a stop of 50, target of 44.
Okay, Biocon, by the way, has resumed its uptrend, so that stock is up almost about 2% on tying up for that biosimilars product. Wonderla Holidays is the other one, 7.5% higher in pre-opening. GST rates reduced, so that stock too is moving up with strength. Mitesh, from the pharmaceutical space, we've been seeing a lot of traction, whether it's names like Biocon, Jubilant Life, etc. Anything that you like there?
See, I think two stocks which I like a lot. One is Sun Pharma and the other one is Wockhardt. I think both these stocks are now showing signs of medium to longer term uptrend or chart reversal happening over there. And I think Sun Pharma, once it starts stabilizing above the 590 mark, I do expect 650 to be tested. While Wockhardt, I've already had a target of around 1000, which is met. But I think eventually after this pullback, which most likely should not go below 850, 870, I think the stock should retest 1000 plus levels.
Sandeep, is there anything that you would tank up before the budget? Any agri stock, infra stock, or expectations of some policy change?
Well, I think if you see the thrust for the last few quarters or maybe more than a year has been on infra, and especially on the road building sector by the minister of that concerned sector. I think there are going to be quite a few options out there which could be multi-baggers. So if you are having a appropriate risk-taking appetite, I would say that this is one sector where I think the taps are going to open from both governmental side as well as PPP or maybe private sector side. And I think the scalability is tremendous, and we have got very few players with appropriate balance sheet strength. So this is the one sector which can turn out to be a dark horse in the pre-budget rally as well as post-budget.
Okay. Well, it's just a minute more for the markets to open. Mitesh, anything that's come into your focus?
Nothing per se, Latha, otherwise.
Okay. Well, Sandeep, are you looking at any of the NCLT kind of cases, steel, stressed stocks?
Well, Latha, I think NCLT cases means theoretically the equity value should be zero. At least that's what the scheme is all about. If you see any spike up in the stock price of a company which has gone into NCLT, it could be speculation of the extreme value. We should not forget what happened in GTB shares many years back. There was a spike in the share, but nothing worked out of it. So I guess there are multiple other options in the steel sector, or maybe the same sectors which large players have gone into NCLT, where people can capitalize about. This is for extreme form of speculators. You could make money, but there is a good chance that you could be stuck in it in a illiquid stock for years to come.
Okay. Well, thanks a lot for that, because those stocks are the ones that are moving violently.